Okay, next, determining the date of disposal DOD, date of acquisition DOA, and Rpgt computation. Okay, date of disposal DOD and date of acquisition DOA. So if you look at the box, DOD of disposal or seller is actually equal to DOA of the asset by the acquirer or purchaser or buyer. So even though I explained about DOD, it also applies to DOA. So here, according to paragraph 15, schedule 2, DOD refers to the date of written agreement. So it will also equivalent to DOA of the buyer or purchaser. However, if there is no agreement, the date of completion of disposal would be the date of disposal. So what is the date of completion of disposal? It refers to the date of transfer of the ownership by way of transfer of legal title, or the date on which the whole of the consideration is paid, whichever is earlier, which means the earlier between the buyer paid for the assets, or the date for the transfer of legal title, which is the earlier date, then it would be the date of completion of disposal. Conditional contract. With effect from 2nd September 2006, DOD for conditional contract remains at the agreement date, notwithstanding with the consideration varies with the contract's condition. So which means when there is conditional contract, the date of disposal will be based on the date as per the agreement. This is to prevent the taxpayer from prolonging the holding period. However, there is actually an exception. If the S&P agreement, sale and purchase agreement, requires approval of government or state government, so the date of disposal would be the date of such approval or the last of all the condition is satisfied. So that is conditional. So this is exception for conditional contract. So which means for contract, DOD remains at the agreement date. However, if it requires approval of government or state government, so DOD is the date of such approval or the last of all the conditions being satisfied. So these are the date of disposal on specific cases as according to paragraph 15A, schedule 2. So the first one, if we have gift of asset on death, so the date of disposal is the date of transfer of ownership of the asset to the recipient. Legatee, which is inheritor accepts an asset in place of money legacy, the date of transfer of ownership of the asset to the legatee. An asset of a deceased person transferred to a legatee by his executor, so the date of transfer of ownership of the asset to the legatee. So these are all the date of disposal. But this is on specific cases. So this is the Rpgt computation. Begins with disposal price, and then you less acquisition price to get either chargeable gain or allowable loss. Chargeable gain is when DP is more than AP, while allowable loss is when DP is less than AP. So the amount or the figure will be in bracket. Then you less schedule 4 exemption, which is either 10,000 or 10% of chargeable gain, whichever is higher. After that, you will less allowable loss if any. So if you have allowable loss, which is either from the disposal of other asset or from the previous period, then you get net chargeable gain. From the net chargeable gain, you will times with the Rpgt rate. So it depends on 30%, 20%, 15%, 10% or 5%. So it depends on the types of chargeable person, company, individual resident or Malaysian citizen, or non-resident or non-Malaysian citizen. So you will get Rpgt payable. And then if you have loss relief, which is for disposal prior to 1st April 2007, you will minus after Rpgt payable to get net Rpgt payable. So if let's say you don't have allowable loss or loss relief, after you minus schedule for exemption, then you get net chargeable gain. straight away you will get net chargeable gain, then you times with the Rpgt rate, and then it will be the final figure, Rpgt payable. The rate item will not be included in your computation if there is no allowable loss or loss relief. So this is how you compute the disposal price as per paragraph 5 schedule 2. So we have the first item, consideration received. When you dispose, you will receive something from the buyer or purchaser. This is known as consideration received. Then you less enhancements costs or permitted expenses. Okay, so enhancements costs or permitted expenses is all enhancements or capital expenditure on the real property. For example, extension or renovation cost, cost of construction or building on the land. Okay, so that is enhancements or permitted expenses, or we always term it as PE. Then you less legal fees in establishing, preserving and defending the land title. Okay, in short, legal fees in defending the land title. So it is a separate item. And the third one, you less incidental cost of disposal. We have stamp duty, other legal fees and professional fees such as brokerage fees, valuation fees or other fees related to disposal, and advertisement costs seeking for buyer. So the final figure will be disposal price. While acquisition price is according to paragraph 4 schedule 2. So acquisition price is on the side of the buyer. So when they buy the property, so what will be the amount paid to the seller? What will be the amount paid to the seller? So that is known as consideration paid. Then you plus incidental cost of purchase, which is somehow the opposite of incidental cost of disposal just now. So it can be stamp duty, legal fees and professional fees such as brokerage fees, valuation, but again you must differentiate whether this cost is related to purchase or disposal. Advertisement cost seeking for seller. Okay, and last, recoveries. Okay, so recoveries is actually the capital receipt which would reduce the acquisition price. So we have insurance recoveries or compensation received for damages or deposit forfeited by the intended buyer of that real property. Okay, then you will get acquisition price. So this is the rate of Rpgt. So just now remember that there can be 30%, 20%, 15% and 5%. So for companies, okay, and also for individual citizen and permanent resident, okay, if disposal is within 3 years after the date of acquisition, first year, second year and third year, so the rate will be 30%. If the disposal is in the 4th year, it will be 20% for both companies and individual citizen and permanent resident. If disposal is in the 5th year, it will be 15%, while if it's after 5 years, that which is in the 6th year onwards, it will be 5% for companies and it will be 5% for companies and 0% for individual. But that is before 2019. If the disposal takes place before 2019, then you will use that rate. 5% for companies, 0% for individual. But starting from 2019, if disposal is after 5 years, it will be 10% charge, okay, for companies and 5% charge for individual citizen and permanent resident. However, for non-citizen or non-permanent resident, the disposal within 5 years of acquisition will be subject to 30%. Alright, but in the 6th year onwards, it will be 10% in 2019, and for disposal prior to 2019, it will be 5%. So with effect from 1st January 2018, the rate for individual who is non-citizen and non-resident is also to include executor of the estate of a deceased person. So which means, okay, the executor or estate of deceased person, they will apply the rate, okay, as per the individual non-citizen and non-resident with effect from 1st January 2018. Allowable loss. Remember, we have allowable loss. So it arises when disposal price is less than acquisition price, DP less than AP. So in this case, no Rpgt is payable, but the taxpayer is still need to submit the Rpgt tax return to IRB within 60 days of the disposal to ensure allowable loss can be carried forward to set off against future chargeable gain. Remember, the Rpgt computation, we can minus allowable loss to reduce the chargeable gain. So that's the reason why IRB asks you to submit Rpgt tax return. Section 7 sub 4c, when there are more than one disposal of real property in a year of assessment, allowable loss from one transaction may be set off against total chargeable gain from other transactions. So, meaning that allowable loss can not only reduce chargeable gain from one property, but it can also actually reduce the chargeable gain from few transactions. And with effect from 1st January 2010, allowable loss from the disposal of real property would be allowed to be carried forward to be set off against chargeable gain either from future disposal, in the same year of assessment or following year of assessment until it is fully utilized. So, if let's say in the same year of assessment, you dispose in the in the future period within that same year of assessment, you dispose another chargeable asset, you get chargeable gain. So the loss can be set off against the chargeable gain for that particular year. Or if you only dispose one property, the following year you dispose another property and you get chargeable gain. So the loss from the previous period can be used, can be carried forward and set off against the chargeable gain in the following period. So this is the difference between allowable loss versus loss relief. Allowable loss is the disposal from 1st January 2010 is when the disposal price less than acquisition price deducted against chargeable gain. So the place is after chargeable gain. But the loss relief is happened long years ago. Disposal prior to 1st April 2007. So this is only if applicable. Okay, so how is actually this loss relief? It is actually allowable loss, but we already times with the applicable tax rate. We already times with the Rpgt rate. So if you have this loss relief, that's the reason it will be deducted against Rpgt payable. Okay. Okay, so next is disposal price deemed at market value, which is according to paragraph 9, schedule 2. So for this case, the market value will actually replace the consideration received as per the original formula under paragraph 5 schedule 2 for the disposal price. So what will be the situation when the disposal price deemed at market value? So first, when the transaction is a bargain not at arm's length, which is that when there is a conflict of interest, or gift transaction. I will actually explain this later. The second one is when a disposal of real property for a consideration that cannot be valued. You want to dispose your real property, but you don't know what will be the value for the disposal. So you will take the market value of the real property. The third one is a disposal of real property in connection with loss of employment or gratuity payment. So if you dispose, because of you as a result of the loss of employment, or you actually terminate someone, or as a gratuity payment, so the disposal value will be the market value. Or transfer of real property for satisfaction of debt, lump sum disposal of real property and other assets, that will also be a market value, and where anti-avoidance under section 25 sub 2 applies. So this is specific case, I will not actually highlight further on this. Okay, so this is the explanation for the first point for the disposal price deemed at market value. Bargain not at arm's length transaction is normally happen due to transfer between related parties such as family, relatives, business associates, partners, holding and subsidiary companies, and also other transfer between companies or related parties. So we will apply the market value as a disposal price to those that are not subject to no gain no loss situation, which is gift transaction under paragraph 12 schedule 2. So we will use that market value. Alright, for this situation and other situation where the disposal price deemed at market value, we will only take the market value if market value is higher than the consideration, okay, consideration received, okay. But normally for this case, okay, because you cannot value the amount, okay, you want to satisfy the debt, you will straight away take the market value, and normally the market value is higher.